Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Trade.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hello, everybody. Welcome to another edition of Minds on the Markets. And here we are solidly in Q4 of this year. And Jeff, obviously, a lot of the headlines tend to be U.S.-centric. Maybe some would argue rightfully so, but we've also had some headlines coming from the other side of the Pacific in Japan lately. So walk us through. We're going to have a new leader in Japan, aren't we?
Yeah, and that's the so-called Takaichi trade, much like Abenomics. And I think that's what's critical here as we are recording this. We've busted up through 50,000 on the Nikkei 225, which was a number that was really you couldn't even conceptualize it a while back, because the old 1989 highs that were broken just really in recent memory were like the 39,000 level. So here we are north of 50,000. And that's because Takaichi is expected to be a continuation of Shinzo Abe. She will hold that mantle. And essentially what that means is it's kind of like these terms we've used in the United States with Reaganomics, Obamonomics, and so forth. Abenomics, as in Shinzo Abe, really means things like fiscal expansion, corporate governance reform, letting the yen weaken so that you can be more competitive against the Americans and the Germans and what have you. And you can see this in the tape, right? Japan's basically one of the best things going right now.
So, I mean, when you do look at a lot of the media out there, social media, mainstream, whatever it is, you get a sense, you continue to hear or read about this bull run in the U.S. And I know you've done some work here, and equities obviously is what I'm talking about, looking at opportunities or earnings yields versus, say, the risk-free treasury security in a specific country. So here in the U.S., even though the 10-year treasury yield just recently dipped below 4%, you're still looking at differentials that may not necessarily look all that compelling, but that's not the case per se when you're talking about Japan, right?
Yeah, and these are concepts that you'll be able to find if you go back through our archives and like and subscribe to the Minds on the Markets. And then also, Kevin, find our written word, because we've written about these concepts over on the Wisdom Tree website with some frequency. Look, we had for years, for good chunks of our careers, this so-called TINA trade, T-I-N-A. There is no alternative to what? Buying stocks because bonds were yielding zero or negative or paltry, whatever the case may be. We had $19 trillion worth of negative debt as a society at one point. And so you said, go buy some Facebook, right? Which subsequently became Meta. And here in the United States, as you were pointing out, benchmark treasuries, Kevin, about call it 4 even, at any given time, 398, 402, 4 even. Last week on a forward multiple in the S&P 500, we hit 25. The 1 divided by 25 is the earnings yield. That's 4% even. So 4% in stocks on an earnings yield, 4% in bonds. Now, granted, U.S. stocks can grow those earnings out of there, but basically no extra pickup, if you will, in U.S. stocks over bonds. And in Japan, I mean, you could argue, I think it's a very reasonable argument, that even with the sell-off in JGBs, that the TINA trade continues. You're looking at, 16 times forward earnings for broad Japan. Call that, just in back of the envelope, this stuff, like a six handle on an earnings yield, mid ones on a 10-year JGB. So call it 4.25, 450 over the sovereign bond for engaging Japanese equities. And then you get a little bit of a call option, Kevin. The call option being, does the corporate governance reform push these moribund return on equity, return on invested capital concepts up into something a little bit more like the U.S.? Is that what gets the Japanese bull market to keep running?
So, I mean, just to continue on that note, final question.
Yeah.
Why is Japan not the U.S., or is it the U.S.? What separates, in your opinion, Japanese equities versus here in the States?
Well, for one, I mean, the bears will constantly point to demographics, and the issue with, pointing out demographics is it's just a raging bull market, because so much of corporate Japan is not necessarily selling toothpaste to Japanese people. It's selling, let's say, autos to American people. That type of concept. That's something that's absolutely critical for those who want to point to the demographic malaise as this chart continues to go up and to the right, and they get left watching. But yeah, I would say the key difference between Japan and the U.S. and the reason why Japan needs to get its act together. I mean, if this bull market is going to continue, it needs to converge on the quality metrics with the S&P 500. I mean, the S&P has a return on equity. It's the most robust return on equity of any country on planet Earth. It's about 18-ish%. Japan's at, depending on the index, like a 10. The bull case is you get, and we've seen some of this from some various players. I think Morgan Stanley was pointing this out. If you can get that 10 ROE up to 11 or 12 by 2026 or 2027, that would be the bullish setup. So it's a convergence with the U.S. if that can come to pass. We don't know if that'll be the case. I think it will be the case because of the big pushes that Kevin, we've been talking about on Minds in the Markets for a long time.
Right.
Some of these concepts, the corporate governance reforms, the name and shame list, the share repurchase push. I think that stuff remains on, and we're steadfastly bullish.
Good stuff, Jeff. So I think we're going to call it an episode right there for this edition. Everybody out there, to Jeff's point, get out there, like us, tell your friends, tell your neighbors, tell your family, everybody out there, Minds on the Markets. There's also a written version on our website as well. So with that, we're going to sign off. Have a great rest of the week, everybody.
See you, Kevin.